Hi there, welcome to Kneppy Invest and welcome to another technical update video. It is December 29, 2024. Pretty good week for the Australian market. In fact, XAO up 2.4%. It was a protracted week, 2 2/3 days of trading. So Christmas Eve, we had 4 hours, if I remember correctly, out of the usual 6. 4 days of trading on Wall Street. I'm pretty sure they would have had 4 days because they don't believe in Boxing Day. In fact, one of the weirdest things I found in the United States wasn't Boxing Day. In fact, if you said Boxing Day to anyone over there, they'd go, huh? But it was just fortnight. I remember saying fortnight a few times and Americans just look at me go, what is a fortnight? I was like, are you kidding me? It's not a computer game. It's actually a time. It's 2 weeks. And they'll go, why did you say 2 weeks? Fortnight. Anyway, this is not a video where I'm going to bash Americans and the weird things they believe in or say and stuff like that. This is a technical update video. So we did have a pretty good week. XAO up 2.4%. However, Wall Street was down on Friday. So I do expect a bit of a weak start to the trading week, another shortened week. I believe we probably have 3 2/3 days of trading this week, because New Year's Eve will be again a shortened trading day. And of course, we don't have any trading on New Year's Day, which would be, Wednesday. And then back to normal Thursday, I think back to normal on a Thursday. However, still fairly quiet in the markets when it comes to announcements. Don't expect many significant announcements released on Thursday, Friday. So I expect we start to see announcements being ramped up probably the middle of January. And don't forget, January is quarterly reporting month. So we'll start to see a lot of reports being released on the ASX, Appendix 4Cs, Appendix 5Bs, also quarterly reporting month in the United States. So January is one of my favorite months of the year when it comes to investing. And it is weird that half of this week or next week is 2024. Half of the trading week is 2025. Yes, that's going to happen next week. Anyway, so pretty good week on the XGO. Nothing to be concerned about. Still in an uptrend. This is the weekly chart right now. A couple of bad or negative weeks, but we've had a bit of a bounce. And if you do have a look at the daily chart, a really sort of V-shaped recovery, very quick V-shaped recovery to really big down days to end last week, and it's recovered. It did recover fairly nicely on the Monday, which was expected because of Wall Street. But I do expect a down day on Monday. I would expect down maybe between 0.5 and 1%. And the reason I say that, Dow Jones down 0.8%, NASDAQ down 1.36%, Russell 2000 down 1.56%. So everything's still moving in the right direction. Nothing to be too concerned about right now. However, if you do look at Twitter, you will see a lot of tweets being released. The market's overvalued, and we are prime for a correction, a pullback in the markets. However, I've been seeing these tweets for the last 3 years, actually probably the last 30 years, to be honest. So pretty good day or pretty good week for the XSHO, shortened week. Pretty good week for the XSO. In fact, the XSO was up, small orders up 2.96% after dropping 3%. So almost recovered the loss we had the previous week. So a little bit of volatility in the markets right now, and I would expect, again, the XSO to drop on Monday. And then after that, who knows? Anyway, so that's really all I want to talk about when it comes to the Australian market. So shortened week, but it was a pretty good week. Now onto the American indices. We'll start off with the NASDAQ. And we did have 4 trading days. I'm pretty sure we would have had 4. Let me have a look to actually absolutely confirm this. Yeah, 1, 2, 3, 4. Yeah, 4. Because again, Boxing Day is not a public holiday there. In fact, I don't even think they recognise Boxing Day. Now the Nasdaq is still an uptrend. In fact, I do have this uptrend line. In fact, if we sort of zoom in a little bit here, it's actually a really good uptrend line. It really started in August, and we've seen the Nasdaq pull back a few times to hit this uptrend line. The most recent time was on the 20th of December, and then it actually rallied on that day. Opened low and then rallied on that day. And then on Friday, even though the market was down, NASDAQ was down, there was a little bit of rally during the day, which I didn't realize until right now. So let's have a look at the 1 minute chart for the NASDAQ. Yes, so actually they hit the low. That's probably a couple of hours before the end of trading, and the Nasdaq actually went up. There you go. And yeah, the Nasdaq did hit that trend line almost perfectly. In fact, it bounced off it and then it hit it again. So twice it bounced off that line. It got very close near the start of trading. So that uptrend line has been, has maintained. Exciting, very exciting for the Nasdaq. Now, onto the Dow Jones. Nasdaq has been looking more favorable than, or more bullish than the Dow Jones, and that's after a period of time when the Dow Jones was looking a little bit better than the Nasdaq. So the Nasdaq has just pulled off from the all-time high, which was reached about a week ago. Dow Jones is looking a little bit weaker, even though we did see a little bit of rally during the week and a little bit of pullback. If we see the Dow Jones fall below the most recent lows, that would be probably the first bullish or bearish move we have seen from this particular indice for quite a while, I'd say, probably for well over a year. So you don't want to see that low breached, and we definitely don't want to see the previous low breach as well, the one at the start of November, because that could be a sign that the Dow Jones has moved out of an uptrend and is at the very least moving into a sideways consolidation period and possibly even into a downtrend. Russell 2000 down 1.56% for the week. And yeah, I'd say this is probably the less bullish of the three. It's moved into that purple box. In fact, it's been in that purple box for the last 4 or 5 trading days. And I'd like to see which way this is going to move. And when I say love, I mean I'm intrigued by which way the Russell 2000 is going to move from now, because if it goes above the box, that would be a bullish. If it goes below the purple box, that would be bearish. So this is an important level, important zone for the Russell 2000. Otherwise, what I'd like to see with Russell 2000, get above the highs we saw back in November, 2,440. But if we start to see it fall below much further, so I'm talking about below, say, 2,180, not much below where it is now, that would be a fairly bearish move. Anyway, so that's the American indices. Still liking what I see with the NASDAQ. Dow Jones, okay, it's still fine. Russell 2000, interesting to see which way it moves from here. Maybe this is the first signs of a bear market. Maybe this is what we're talking about. Or maybe this is a video I'll come back to and go, hey, this is the first signs we saw of the new bear market, maybe a long bear market forming or developing. Okay, now let's have a look at some indices overseas, international indices, starting off with the Nikkei. Oh, this is an interesting one. Pretty good day or week for the Nikkei. So for the week, up 4.1%. Go Nikkei. And I just like that there is a bit of a fairly weak sort of resistance level at about 40,000. And it's definitely trying to get above that level. So I actually do like this Nikkei chart. I do like it. And I think the bullish move we saw the last 2 trading days of the week is a possible sign that there's more uplift for the Nikkei. However, NASDAQ down, Dow Jones down. So there will be, I think, a pullback in the Nikkei on Monday's session. What about the Hang Seng? So, and definitely not as bullish with the Hang Seng. Definitely moved out of its downtrend. That happened back in September. But I need to see a bit of movement here. I need to see a little bit of strength coming in the Hang Seng in the Chinese markets. I'm not really seeing that right now. The only good thing is, yeah, that downtrend has come to an end. Now on to the DAX and the FTSE. DAX, just a little bit of pullback. That's fine. In fact, for the week, DAX was relatively flat, only up 0.5%. So not as bullish of a week, a good week for the DAX as other indices. And funny enough, I did hear someone talk about how the German economy is doing really badly, and they just inferred that the DAX must be doing pretty poorly as well. I can guarantee you they did not have a look at the DAX chart, because if you have a look at this DAX chart, you can't make that statement. Just because the economy's sluggish right now, and that could be an understatement, doesn't mean the German stock market is doing badly. It's the complete opposite. So DAX still doing fairly well. FTSE has been going sideways for a while, and it's still going sideways. It keeps bouncing off this, so the bottom of the trading range. It's done it now 3 times since July, and it needs to get above the top of the trading range, which is around about 8,400. So which way is it going to go from here? I'm always intrigued by these consolidation or these trading range because the trade is easy. If it breaks above the top, you trade it, you buy. If it breaks below and you like shorting, you short it. That's the way you trade these particular trading ranges. I don't short, so I'm just looking for a break. If I was trading this or trading the index, I'd be waiting for a break above it. Okay, so that's the indices around the world. And by the way, FTSE for the week up only 0.81%. Not as good as, what was it, Russell 2000? Was that up 4%? Something was up 4% anyway. That was the index of the week. Now on to commodities, and nothing much to say when it comes to commodities. What I might just do is have a look at the weekly chart just to see what's happened. And when I say not much, gold, nothing. In fact, for the week, gold, flat. Now, it wasn't exactly flat. It was down 0.04%. But we'll say it's flat. So because it's flat, there's no change in sentiment. No change, in my opinion, on gold. It's still looking pretty good on the weekly chart. Still looking pretty good on the daily chart. So there is a possible sign that gold is starting to move in a consolidation phase. So we want to see gold move a little bit higher from here. If it does fall below maybe 2,520, that would be a negative sign. So at this point in time, it could go either way. But still in an uptrend, particularly when you're looking at the weekly chart. What about silver? I'll go back to the weekly chart. Silver, we want silver to at least be up a little bit. No. Yeah, it was up. It was up 0.03%. There you go. Again, just like gold, flat. We'll just say it's flat. Now, silver last week, was it last week or the week before? Yeah, it was last week or the week before. It did break below the uptrend. So we want to see silver go on a bit of a spurt. Go a little bit higher from here because when I do look at the daily chart, I'm seeing it's not as bullish as I have been in the past. It did break below that uptrend line. And so maybe you could say this is a bearish move for silver. But because gold is still looking okay, and silver does ride the coattails of gold to a certain extent, if gold goes on a bit of a bull run, silver will, be pulled along for the ride. Now on to copper, I've been fairly neutral with copper recently, and I don't think that's changed. Copper was up 0.52% for the week, but if you do look at the daily chart, there's no trend here at all for copper. It's more closely to a support level than any resistance levels. So if anything, there might be a little bit of upside from here for copper, but yeah, no opinion with copper right now. Iron ore had a good end to the week, up 1.1% on Monday. Oh, that's Monday. That's the start of the new week. That is not tomorrow. I have not gone into Time Machine, even though this says Monday, the 30th of December. I've not gotten into Time Machine, but I would say this has started early. So I'm going to look at 1 minute chart. When does Monday start? I'm going to see if they've got this. Oh, this is, so yeah, this is, I don't know why it's got Monday there because the 30th here has not started. So this, according to this, I honestly have no idea. Anyway, if we go back to the daily chart for iron ore, again, I think I'm a little bit, if anything, I'd be slightly bearish when it comes to iron ore. If anything, definitely not bullish. So I'm more neutral, bearish than anything when it comes to iron ore. If it gets to $80, that's a really significant support level for iron ore. That would be interesting level. I might even consider buying some shares in some iron ore companies if it gets to $80. And then if we see iron ore fall below $80, that will be quite negative, and then I'd sell those positions. So otherwise, I have no opinion about iron ore right now. Uranium, however, I have a feeling I'm a little bit more bearish about uranium. No, that's wrong. I remember uranium, got down to this support level, which was about $23. So that would have been on Friday. No, that's Tuesday. Ah, I see. That was on the Tuesday session. And then on Friday session, iron ore or uranium, spot physical uranium up a little bit, up 2.2%. So it has bounced off this support level. That's an interesting move. I did have a look at a lot of uranium companies' charts on the ASX, and none of them look any good right now. So we really don't want to see uranium fall much further from here. We don't want to see it fall any further. That would be a fairly bearish move for uranium. Anyway, so no real opinion about uranium. What about oil? And I haven't had an opinion about oil for a long, long time, and that continues. Not even sure why I'm talking about oil. If you have a look at the weekly chart for oil, there's nothing here. I did see an interesting tweet because apparently Buffett keeps adding to his Occidental holding, and he's down $2 billion at the moment because his holding in Occidental keeps on dropping. The price keeps on dropping, so he keeps on adding. So it's really interesting. So he's bullish on oil, but maybe they often make bad decisions, and maybe Occidental is another one of these bad decisions. Some people just believe he makes all the right decisions, 100% perfect. He's not. He's human just like everyone else, or they're human just like everyone else, and they make bad decisions. I would not be trading any oil companies right now, or I would not be owning or trading any oil companies right now. There's just no trend. I'm not seeing any trend at all. If anything, there's a downtrend, if anything. Okay, back to weekly charts. Lithium. Look at that. Look at that weekly chart for lithium. It's just horrendous. Maybe has found a bottom, just maybe at this point. And eventually, I think this will be a really good play. Bottom of the cycle is the time to buy companies. And I am starting to pay a little more attention to lithium companies on the ASX. For instance, Pilbara. Let's have a look at a couple. Pilbara. Oh, Pilbara's good. The weekly chart is really good. So there's a nice little support level at about $2, a round number. That level is significant because if we go back to August 2021, there was a nice little breakout, and then it stayed just above that level for about 2 or 3 months. You can see whenever a share price of Pilbara went below $2, there was a bit of buying. Then the share price of Pilbara pulled back to $2 in June 2022, and then went a really good rally after that. So $2 is a important level for Pilbara, and it's at $2.19 right now. And if we do have a look at daily chart, it looks like it did get very close to $2 on the 20th of December. In fact, the low on the day was $2.06. So that's an important level for Pilbara, and maybe the low is in. So maybe around $2.06 is the low for Pilbara, but trend is down, and it could fall lower from here. And if it breaks below $2, that would be negative. The other one, what about Liontown? I am going to show you, I think Vulcan Energy. It's in my company list, but Liontown. So Jen Reinhardt bought some shares in Liontown, so everyone thought, well, Jen Reinhardt knows what she's doing. Yeah, not necessarily. I would never, ever buy a company just because some rich person bought some shares. I would never do that. Never. Ever, ever. I would never do that, have never done that, will never do that, because they're all human. And I'm pretty sure Jen Reinhardt bought shares. In fact, let's have a look. Jen Reinhardt buying Liontown. What price? Now, what price? So she bought 33.9 million shares at around $3 per share. This is according to AI Overview. So $3 per share. So what date was that? 2023. $3. And I'm pretty sure, I think the share price rallied because she bought some shares at $3. Or maybe there was a takeover, I forget now. So she bought near the top. Near the top. Share price now 55 cents. So just because, and a lot of people probably bought Liontown Resources because Jen Reinhardt bought, and they was thinking, well, if she likes this company, it must be a pretty good company. And those people are down a lot if they maintain the holding. Share price has gone from $3 to 55 cents. So that's one of the reasons why I never follow anyone. I don't really look at who's buying what. And if they're buying, I'm more bullish, or if they're selling, I'm less bullish or more bearish, because they're human, they make mistakes. We all make mistakes. Anyway, let's go back to look chart for Liontown. It's really interesting because the share price of Liontown is in a downtrend. We've seen on occasion the share price rallying and it always falls short. And yeah, at this point in time, I've been waiting for a crossover between 25 and 100-day moving average. It got very close in May. Very close in May. I thought that was it. And we did see it get very close in November. And now the share price has just sort of pulled back. Not pulled back, but it's just it just ripped a little bit. Maybe not ripped, but it just has come off the long-term lows, and that long-term low is about 50 cents, 52.5 cents. Anyway, so I think the bottom is near for lithium, but just because the bottom might be near, it doesn't mean lithium prices won't go sideways for 5 years. It could, and that does mean that lithium companies like Liontown are just not in play. And I always remember, always tell myself, sometimes a little bit too early to the party, and I don't want to get too early to the lithium party. I do think it will happen again, but I'm not sure when it's going to be. What else can we look at? Coal, not interested at the moment. What about tin? Just looking at the weekly charts for these, not interested at the moment. Nickel, I don't think I'm going to be interested, no. And palladium, not interested in palladium right now either. And what about cocoa? It's pulled back a fair bit. Oh, yes, look at that. Pull back. Cocoa prices are falling. Every single day I go to the supermarket, look at some chocolates, and I go, no chocolates today because they're way too expensive. And I have been wondering, is that because of cocoa prices? And I can guarantee you, if that is the reason why chocolate prices are a little bit higher now, and if cocoa prices fall, say by 60, 70%, the price of chocolate you buy at the supermarket won't go up. Their margins will go up, but they won't decrease the prices. So the prices we see now for chocolates will remain where they are. Almost guarantee you that. Okay, that's commodities, including cocoa. I suppose cocoa is a commodity. Now onto Bitcoin and Ethereum. Am I excited about any of this? No. So Bitcoin right now is about 95,000. In fact, that is a daily chart. In fact, it's 94,980. So it has pulled back. It did get over $100,000, and that's pulled lower. So I wouldn't be surprised to see it just oscillate above, below $100,000 for a while, because $100,000 is an obvious area of resistance, and eventually it will become support. But right now it's resistance. I would guarantee you there are a lot of people holding Bitcoin who said, when it gets to $100,000, I'm going to sell. In fact, I've seen tweets about that exactly. And a lot of the tweets have mentioned, wow, I'm going to sell $100,000 and then buy back when it gets to $30,000. So they're assured, they're confident, very confident the price of Bitcoin will drop a lot. I'm not that confident. So the longer we see it oscillate, just go sideways, just below $100,000, I think the more likely we're going to see $100,000 broken, because all those who want to sell out have sold out. And then if it does break above $100,000, it looks like it's going to go on a run. All those who sold $100,000, hoping this price will pull back to $30,000, will buy back in. Because they go, oh crap, I've got this wrong, and FOMO will take control, that sort of thing. Anyhow, so no concerns about Bitcoin right now. We're on a beautiful run for about a month, 2 months. I went from $60,000 to $100,000. So you're always going to have this little period where nothing much happens. And Ethereum, what about Ethereum? So Ethereum, the important level for Ethereum is 4,000. And you can see it's struggling to get above 4,000 back in December, start of December. We'll say start and middle of December, and it has pulled back. This could be a buy the dip situation for Ethereum. Now onto bonds. First one is the 30-year bonds, and look at this. Jeez, it's just... Okay, that's really interesting. This is really interesting. There's a lot of talk about bonds. What's happening here? My thoughts about this is the bond market is sort of screaming out inflation. Trump's policies are inflationary if he gets what he wants, and that's what the bond market is saying. In fact, the bond market was saying that back here in September, way before the election. It's really interesting. They started lowering the interest rates in the United States, so the bond yield should be falling. Instead, they started to rise. So there is a disconnect between the bond yields and interest rates. And I do remember seeing a tweet that this has never happened before. Maybe that's wrong, but it happens very rarely where you see bond yields going around, yet interest rates are dropping. So there is a disconnect, and I believe that disconnect is because this belief that inflation will come back because Trump's policies are inflationary. So definitely tariffs are inflationary. That's a no-brainer. What else will be inflationary? Well, if they really cut government spending, that's actually the opposite of inflationary. But that's the opposite of inflationary. But that could be, recession. That would be a recession. You think about it. If they raise tariffs, so people paying more for stuff, if they decrease immigration or throw people out of the country, that would be pretty harmful to the economy. And government spending, I haven't really been thinking about government spending, because they are saying they're going to cut government spending by quite a bit, cut taxes, cut government spending, and that actually would be disinflationary, but that would be harmful for the government or the economy in the short term. I'd say it'd be quite good in the long term because I'm not a big fan of too much government spending, and I believe Americans, Australians, they have way too much government spending, and there should be way more efficiency. So in a way, I do like what they're trying to do over there. If they do it, cut government spending, but in the short term, it will be a little bit harmful for the government because really over there, government spending has been propping up the economy. Anyway, so a really interesting chart here, and the bond yields getting to the highs we saw back in April. Oh, look at that perfectly. So we don't have to look at other bonds. Let's have a look at the dollar. Dollar should be just dropping. Yep, keeps on dropping. It's an important level now. You can just see I've got a line there, dashed line. It's an important level, and it's just a nasty looking chart. Aussie dollar. It's gone from 69 cents to 62 cents, and this is another sign that what the market is saying here is, would you rather have your money in Australian dollars or US dollars if they have higher inflation and then interest rates start rising? You want your money in US dollars if that happens. So this is another sign that people are bullish when it comes to inflation and rising interest rates in the United States compared to Australia. If we're bullish about that also happening in Australia, you wouldn't see much reaction from the currency. The other thing I don't like is I have seen tweets blaming the Australian government for this, in the currency. Nothing to do with the government. And in fact, one of the members of parliament, I think I saw some tweets blaming the government for this. Nothing to do with the government. They can't control the currency. Okay, that's all I've got. I suppose they could in a way, but no, they shouldn't. Governments should not have or try to control currencies. Funnily enough, Trump wants a weak US dollar because that means exports are way more attractive than imports. Just like there are benefits for having Australian dollar low. It's actually really good for exports. Okay. And not good for imports. But then we pay more for prices. We pay more for our imports. So it can be inflationary too, which is a weird thing. Okay, so now onto some individual companies' charts. I do have a few here. 1, 2, 3, 4, 5, 6. Oh, I have 10. I'm going to look at a few charts of companies that I do own, and then we'll have a look at some other interesting charts. So I'll start off with Audinate. So this is an interesting one. So if I was just trading this, I would have probably got out back in May. In fact, I probably would have got out about $18, and the share price now $7.43. And then the company when they released results in August, the market didn't like it. Share price dropped 36% on that day. I do know a lot of people were so excited buying shares at a much cheaper price. That's why the share price bounced, a really quick bounce. But I was like, no, I'm not going to buy any bounce or add to my position with any bounce. I do think with that moat, this company, I have heard some people say that moat is not as significant as what experts believe. I'm not sure the reasoning behind that. But anyway, they do seem like they have a pretty good moat. Their competitors aren't really growing, or they don't have much, there's not much growth there, but Audinate is growing at quite a significant rate. But they did release some disappointing numbers. I think also their outlook was disappointing as well. But there was a really good bounce, which sort of makes sense because if you were a non-holder, and you saw the share price go up to $23, you go, I wish I was a shareholder. And then you saw the share price dropping. And then on that day, you see the share price drop to like $7. You go, oh, I've got my opportunity to buy. So there was buying. Definitely on that day, there was buying. That buying continued for about 2 weeks. Share price went all the way up to over $11 with that increased interest in Audinate. But that interest dies away fairly quickly because all those who want to buy in, who had a bit of FOMO when the share price got up to $23, found the opportunity to buy at lower prices, and they were buying en masse. And eventually that group of investors dies away. No, there's no more left, particularly when the share price keeps on going up. So then that's why we've seen the share price just drift lower since then. And now the share price is getting to where the share price was, or even the low on that day, 6th of August. The low on that day was $6.50 and share price now $7.43. Would not be surprised if the share price gets below that. So I am looking to add to my position in Audinate, but I'm not there just yet. I don't know if the bad news has come to an end. I need a little bit of proof that bad news has come to an end. And I need something in the chart. The chart is telling me there's more downside possibly at play here. Step one is an interesting one. Actually, this is a good one to study, I think. So if we go back, so they listed back in late 2021, nothing but bad news. Late 2021 into 2022. Share price dropped from $3 all the way down to a low of, 20 cents in May 2022. Then the share price went on a long consolidation period. So we're talking about from May 2022 all the way through to August 2023. So we're talking about 15 months where the share price just went sideways. So all the bad news had been priced in. We saw a shift in the trend. You can see all these crossovers between February and June. That was a good sign that the trend was starting to change, and all we needed was a breakout. And that breakout happened on the 22nd of August. That would have been results. Some really big volume came in just after that. You can see quite a few days of really good volume, and that's when the share price moved into a really good uptrend. And I've just bought some shares just after that breakout. Share price went all the way up to $1.90 or so, and share price hasn't been doing anything since then. So I put this horizontal dashed line at $1.25. That's an important line. That's if the share price falls below that, that would be a fairly bearish move for step one, and the share price is hovering right at that price point. In fact, it's been hovering in that area ever since the 16th of December. So that means there is a little bit of support at these levels, but not enough enthusiasm from buyers for the share price to have a pretty good bounce like we saw back in November, and also when we saw back in July. It must have been a good 17th of July, must have been a good announcement. Share price went up 23.3%, and nothing really came of that. I keep getting, I am a consumer of Step 1 clothing products. I do like their products, but I'm always getting these special deals. We just had one, I think, just finished. Buy 4, get 6 free. But I already had one or took advantage of a deal, which was I think it was like 6, get 8 free. So we always have these deals from Step 1, which could be a good thing, because the only reason I bought some Step 1 underwear was because of one of these deals. I went, I think it's time to try. So you will get new customers with these deals, but I do think there would be a bit of a hit to their margins, because it just seems like so many specials from Step 1. Anyway, so the whole moral of this particular chart, if the share price drops much lower from here, that would be quite negative. I would even say maybe there's some value at the current prices, so that could be a bit of support to the share price as well. A bit of value does help. And the very fact the company is profitable and growing doesn't hurt either. Now on to Temple and Webster. So let's go back in time. And I'll always remember this, Temple and Webster. It's quite humid in Brisbane today. I always remember this. So in Temple and Webster, they sell furniture online, that sort of thing. And they listed back in 2015. I remember them listing and going, why would anyone buy furniture online? I still think that. Why would anyone buy furniture online? Although I did have that thought about running shoes. Now I buy all my running shoes online. So I suppose I am open-minded and I can change. But just after they listed, it just went pear-shaped for Webster. Share price went from 95 cents, almost $1, all the way down to a low of about 12 cents. That was in July 2016. And then we had a long consolidation period, maybe not as long as close to step one's consolidation period. The share price of step one, of Webster just went sideways for a long time, up until July, August of 2018. And then we saw a breakout. Not really big volume came in, but we definitely saw a breakout. And I remember this happening. I remember, oh, this looks like a breakout Webster. Maybe I should buy some shares at about 20 cents. I went, nah, I just don't like the business model. And this is a good lesson that just because you might not like a business model doesn't mean a company can't do wonderful things. Well, the company's chart can't do wonderful things. So then the chart just went into a long-term uptrend. In fact, the share price went from 20 cents. And if I was just trading this, I might have sold during COVID-19 when the share price was above $2. So that would have been a really nice 10-bagger if I was just trading this via the chart. Then the share price went on a beautiful run during 2020, 2021, went all the way up to $14. And to be honest with you, since then, nothing much. This company does go through periods where it's liked by the market and then goes through periods where it's disliked by the market. And I suppose right now it is liked by the market and I am trading it, but I still question why people buy furniture online. I still question it. A company has a market cap of 1.6 billion and a P ratio of 1,001. But I'm just trading this. I don't care about financials. And so that does look interesting. But the main reason I wanted to show you Webster is just because of the history. Now onto some other charts. Stealth Group. This is an interesting one. So I bought at 15.5 cents. There was a period of time when I probably should have sold. This was back in June of this year. Share price was doing nothing for a while, and I was thinking of selling. And then all of a sudden, the share price went on a massive tear after they released results in August and September. You can see that massive volume coming in. And finally, the share price went up to the mid-30s. And I am a member of this online group of investors, private group. And there were actually quite a few shareholders at that point. And they were just saying, well, share price has gone up, I'm going to sell. And I was like, I didn't say this, but I was like, why would you sell? Share price has gone on a bit of a spurt. Share price is just going sideways. There's no reason to sell just by technical analysis. Just hold on to your shares. And mostly, the reason they were giving for why they were selling is because valuation. I was like, okay, fine. And then we had another spurt in the share price, corresponding with, again, some really good volume. And the share price has pulled back from there. So maybe that is a sign there is some people taking a bit of profits. But this company, one of the reasons I like this company is they do have long-term goals. And if they meet those long-term goals, I think there is some value in this company. However, actually, there's no however. Market cap 50 million, dividend yield 2%, P ratio 31. Redox, yes, Redox. So this is a good one. This is a good study in patience on my part. So the price, I bought in at $3.01, and this was in May. And then the share price has went sideways from when I bought all the way through to September. So we're talking about 4 months. Share price went sideways. At no point was I thinking of selling. I thought the share price was still had the potential to keep on going up. And we saw a couple of times when the share price went up a fair bit in a day and then pulled back. We saw that when they released the results in August, the 22nd of August. You'd see this one-day candlestick, red candlesticks. So there was a lot of selling pressure on that day. And I thought that could be the time to sell just after that. But then the share price moved into a beautiful uptrend. And for some reason, the market likes this company now. We've seen a subtle increase in volume. It's very subtle. If we just zoom in a little bit, so to get out that really high volume back just before I bought, we have seen a subtle increase in volume from September. So that's a good sign. And yeah, this is a nice looking chart at this point in time. So Redox looks pretty good. Just studying patience. Sometimes you do have to remain patient. And then, yeah, just sometimes just stick with it. Ebos. Okay, this is a breakout, a potential breakout. I have this on my watch list. The reason I have this on my watch list is $35 is an obvious breakout level. The reason I say $35 is really obvious is if you go back to, say, November 2023 all the way through to now, you can just see Ebos share price is really struggling to get above $35. If you go back to the start of this year, end of last year, just look at how many times the share price has touched $34 and then pulled back, actually $35, and then pulled back. It happened on probably 15, 20 times or days, and then the share price went lower, and then the share price rebounded back up to $35. And every single time it gets to $35, it pulls back. So when it breaks above $35, that's going to be a really significant day for Ebos. So this is the sort of thing I'm looking for, a breakout when a certain price has been tested so many times. Eventually, when it does break out, I think it's going to be a pretty good breakout for Ebos. Next one is Spark, New Zealand. So this one, I think if you look at the weekly chart, you'll notice the share price of this one has just fallen off a cliff. So before the last, say, 3 or 4 months, maybe even longer than that, share price was in a nice little uptrend. If you go back to 2014, share price went from, say, $1.80 all the way up to $5. Nice chart. Some reason the share price has just dropped significantly. But again, share price can go up like a really slow pace and then fall down really quickly. What's the saying? It goes up stairs and then drops on an elevator or something like that. That's because fear is more powerful than greed. It's much more powerful than greed. Anyway, share price has dropped very quickly. However, look at that massive increase in volume. Massive increase in volume since September. So there is a lot of interest in this company, but there's a lot of buying, but there's a lot of selling as well. So at this point in time, the enthusiasm of the sellers matches the enthusiasm of the buyers. So I'm thinking eventually that's going to change. And we have seen a big spike in volume on the 20th of September. That could be a good sign that the bottom is nearly in. That's the main reason I'm looking at this one, because of that spike in volume on the 20th of December. But definitely, if you look at the daily chart, you can see some really good volume starting late September. Anyway, so maybe there's value in Spark New Zealand, and maybe this is the bottom. Okay, Beach Energy. Not a big fan of oil companies, but this is an interesting chart. In fact, we've also got a 25-100-day EMA crossover. Happened very recently, last few days. And this chart does look pretty good. And I have a feeling there's been some positive vibes about Beach Energy. Actually, don't know. I think there was. I've got in the back of my mind, I do remember something positive happened recently. Maybe it was the first quarter or first gas from Thylacine West. I don't know. I can't remember. Anyway, but the chart is telling me that it is starting to look, it is looking okay. We've had a crossover. So this is also what I'm looking for. A bit of a shift in sentiment, shift in trend in the share price, and maybe this is a possible trade. SSR Mining. This is another. So this one crossed over, the moving average crossed over back in September at about $8, and we saw a really good run in the share price back in December, early December, and the share price has pulled back. I do like this pullback. So this is a gold mining producer. They had a mine in Turkey. Something bad happened to that mine in early this year. You can see the share price dropped 52% on the 14th of February. And I think that we have seen a shift in sentiment recently. So definitely keep an eye on this one and a potential trade. SSR Mining. And finally, Monadelphous. I think I mentioned this one a few times. I might have even mentioned it last week. And we did see a pretty good run in the share price in the trading days we had this week. In fact, the share price of Monadelphous went up this week or last week, went up 5%. And I do like this chart. And just like Beach, we've recently had a crossover. Now, just because you had a crossover doesn't mean we're going to see a long-term uptrend, because a lot of times you see a crossover and then it crosses back fairly quickly. You can see that a lot in charts, but this is just potential. And also I'm looking, this is what I'm looking at, this sort of setup. If you go to some of the other false breakouts, you don't really see that setup. This is the setup I'm looking for. Anyway, that's all I have for this particular video. Oh, by the way, what I mean by this setup. So you can see the share price was dropping, then the share price went sideways, not for a long time, but it went sideways, and then we saw the share price starting to go up. So some of these other crosses, the share price dropped, rallied, dropped, rallied. You don't see any sort of consolidation period at all. So it's just dropped, went up, dropped, went up. That's what I'm looking for. I'm looking for a little bit of a consolidation period, and then I'm looking for a clean crossover. And this is what I'm not sure if that's the word, but it's a nice little crossover here. You can see them fairly close together for a period of time, and then it just crosses over. That's what I'm looking for. These crossovers, you can see the angle's fairly sharp. Maybe that's what I'm talking about. And I'm looking for a very, not as sharp. Maybe that's the way to put it. Not as sharp. You can see beach energy. Yeah, you can see a bit of a consolidation period here, and then the crossover is not that sharp either. Doesn't always work. This is not 100% verifiable, going a successful trade. Nothing is like that. If this was 100% successful or going to be 100% successful trade, I'd be the richest person in the world. Doesn't work like that. Okay, that's all I have for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.